a report saying that Adani Group, an Indian conglomerate that runs a portfolio of energy and logistics companies, is committing what it called the largest con in corporate history. As we know,
they called him the Madoff of Manhattan. At the bottom of Hindenburg's research report, it says this, quote, Adani seems unaware that Madoff lived in Manhattan, so he was quite literally his own Madoff of Manhattan.
For me, the interest of my investor is paramount and everything is secondary. Hence, to insulate the investors from potential losses, we have withdrawn the FPO.
Some have called this a calculated attack on Adani Group. Others have said it's even more sinister and could be a target on the growing economy of India. Today, we're going to be taking a look at the case of Hindenburg Research versus Adani Group, an Indian conglomerate worth about $200 billion before the whole scandal. Since Hindenburg Research, a US-based shorts investment firm, accused Adani of what it calls the biggest fraud in history, Adani has lost close to $100 billion in only 1 week. This is massive, and the controversy is dazzling. But there's a lot more to this story. Is this really a case of fraud, or is Hindenburg trying to cash out on Adani's failure? David Friedberg and Chamath Palihapitiya are going to help us to understand what's going on. But above all, we appreciate having you here, and we'd love if you were one of our subscribers. Be sure to click the subscribe button before you proceed. Thanks. And now over to David Friedberg.
The conversation I thought it would be interesting for us to have is the role that these short seller research analysts play in driving efficient markets by identifying perhaps things that the market broadly is missing, particularly given that a few weeks ago we were all kind of talking about the FTX debacle and how no one was doing their diligence and no one was digging in and no one was kind of revealing publicly what was going on inside of that business that ultimately caused significant losses. You know, the claims made by Hindenburg is that this company, Adani, which is founded and run by a guy named Gautam Adani, he started the company like, I think 35 years ago. And he's built this thing into this, you know, the sprawling empire, as people would say, where he owns ports, he owns mining companies, he owns energy transmission businesses, he's got a whole green energy business, and he's taken a bunch of these companies and he's floated them publicly, so they're all kind of publicly traded. There's some degree of interrelatedness between all these businesses. It reminds me a lot of, I don't know if any of you guys remember Ike Batista out of Brazil. You guys remember this guy? Where, you know, he kind of built this sprawling empire, very kind of broadly diversified industrial conglomerate with, you know, lots of different kind of segments, and used a lot of leverage, a lot of debt to grow the business, and a lot of interrelated inter-party transactions. And ultimately, the whole thing kind of came crashing down. And that this Adani business, it's super technical and super complicated, all the kind of accounting shenanigans that Hindenburg is claiming has been going on, and capital markets shenanigans that they're claiming have been going on with this business. But their kind of report, which I think is like 400 pages long, has caused...
The response was 400 pages.
The response was long too. Yeah, and then the market shrugged off the response that he put out, didn't really care, and they kept selling the stocks off. So there's like 7 or 8 publicly traded companies, all of which are just getting decimated. Look, I don't have any strong opinion on this business. I kind of skimmed through the thing. But, it really made me question, like, how such a big, call it accounting or capital markets fraud, if it really is that, can go on, and how much of a role these sorts of players play in the market, and whether you guys think that this is a good thing in the market to have these short seller reporters out there, doing this analysis, publishing it. Jason, by the way, you called out Nikola, the electric car company. As you know, Hindenburg put out that Nikola report, stock tanked, right? They claimed it was all fraud.
In case you're confused, Gautam Adani was the richest man in Asia and 3rd richest in the world, with a net worth of $137.4 billion. He became the first Asian to ever make it to the top 3 positions in the world. He would still go on to become the 2nd richest man in the world in September of 2022, when his worth rose to $148 billion, overtaking Jeff Bezos. Now, this man's group of companies are in almost all major industries you can imagine in India, so you know he's extremely accomplished and important. On the other hand, Hindenburg Research is notorious for writing damning reports about big companies. The question is, are they doing this just to cause investors to lose confidence in companies so that they can make money, or are these genuine reports? The fact that Hindenburg is into shorting companies is a big cause of concern. This means that they bet on companies failing, and when that happens, Hindenburg wins big. This is how short sellers make their money. But again, the accusations Hindenburg has brought forward against Adani are very serious and should be a cause for concern. It reminds us of fraudsters such as Sam Bankman-Fried and how he used FTX and Alameda Research to scam investors. Hindenburg is functionally claiming that Adani is doing the same. Elon Musk had been in a similar position before, but was he also running a fraud? Chamath weighs in on this.
Elon had these guys literally claiming he was running a fraud for years and years, and it was an intense amount of scrutiny because when the stock was less trafficked in, when we were in it in 2015 and 16 and 17, that was the constant refrain, and Elon was constantly batting back folks like this who would make claims. And the way that these guys are allowed to operate is because they use the First Amendment and say, we have the right to say this stuff. I think that shorting falls into two buckets. One is you use it as a hedging instrument. So when we talk about spread trades like long Google, short Facebook, or long Facebook, short Google, you should be allowed to short. I think that's a very reasonable thing to do. I think the question is, if you were on the inside of a company and you say XYZ is happening, for example, Trevor Milton, and it causes the stock to go up and it turns out to be fraudulent, he's held accountable. The question is, should there be the same responsibility for people on the outside who, if they have enough distribution, can say the exact opposite of XYZ is happening? In this case, XYZ is not happening, which then causes the stock to go down.
The same Hindenburg research had come after Nikola founder Trevor Milton on similar accusations, and at the end of the day, he was found guilty. Trevor Milton had used false account statements to drive the stocks of Nikola. That is exactly what Adani is being accused of in this case, and there seem to be genuine reasons to suspect Adani. Hindenburg Research has so far dared Adani Group to sue them. Would this take a legal twist?
The business model of these short sellers is write a document, it looks very polished and very credible, put on some positions, then put the document out. If the stock goes down, you close it out. In my opinion, I think that short sellers are a really important part of a well-functioning market, or the ability to short. But what I would like to do is take an extra step, which is you should hold these folks accountable the same way you'd hold an insider accountable, which is almost to the effect of like when you put out this screed, if you make money from it, it should sit in escrow, and the SEC should actually adjudicate whether it's true or not. So in the case of Hindenburg and Nikola, they shorted the stock. They put out a report. It turned out they were right. All that money is completely well earned. Now, what if this Adani thing turns out to be not true or true? Nobody knows right now, except 50% of the market cap has already been wiped out. So that's where things I think are in a bit of a gray area. The last thing I'll say is that if you look at it in the developing world, there's a very gray line between some of the leading entrepreneurs and these governments, because these entrepreneurs are doing the work of some of these governments. Whether it's Ike Batista in Brazil in one moment, right, around natural resources, or Adani and Ambani in India, or a lot of the people that have made a lot of money in China, or the people that are making money in developing markets, Turkey, Russia, etc. The government uses very talented entrepreneurs to go and concentrate capital to develop infrastructure progress. We did that in America in the 1800s as well. So that's where I think, you have to also balance it, because his response was basically like, this is an attack on India. And in a way, you can see where he's coming from, right? Because he's building ports and roads and bridges. And he's like, without this stuff, how is India supposed to even exist in the 21st century? That's a reasonable claim. So I agree with you, Friedberg. I don't know whether the report is right or not. But this extra step of actually having the SEC actually tell us what the answer is, I think would be a very important improvement to how this kind of stuff works.
Short selling can become fraudulent, and news can be put out to profit by driving the market down. We don't actually know if the accusations are true. Adani thinks that they're trying to bring him down because he's done a lot of good for India. For now, the war of words between Hindenburg and Adani continues, even as the Indian company struggles to reassure investors. But what about you guys? Let us know what you think in the comments section below. To follow this case, be sure to subscribe to the channel, and we promise to keep you updated.